Hey everyone, welcome back to Corporate Decoder, the place where we decipher corporate filings so you don't have to. This filing has got it all. It's got some shareholder votes, some directed changes, and of course our favorite share option schemes. We're diving into Adaptimmune Therapeutics proxy statement, but we are not there to be bored. Forget the fancy jargon and legal mumbo-jumbo. Today we're finding the real story hidden in these documents. Did executives get a raise? What's the board really up to? And should shareholders be worried or excited? Let's get started. This document was put out on April 25, 2025, and it's addressed to the shareholders of Adaptimmune Therapeutics. Basically, they're getting ready for the annual general meeting, which is a big meeting where shareholders get to vote on important company decisions. First up, there's a bunch of votes for directors. We're talking about re-electing people like Ali Bebabani, John Fure, and Adrian Rockcliffe. These guys are already on the board, and now shareholders get to say if they want them to stay. Next, there's a vote on whether to keep KPMG as the company's auditors. Auditors are like financial watchdogs, making sure the company's books are in order. They also want to let the auditors, it's a question of who gets to decide the watchdog's salary. Of course, there's also the usual vote to approve the company's financial reports from last year, plus a non-binding vote on executive compensation. Basically, shareholders get to say whether they think the top bosses are getting paid too much, too little, or just right. Here's where things get interesting. They're asking shareholders to approve a new share option scheme for employees and another one for non-employees. These schemes let people buy company stock at a set price, which can be a sweet deal if the stock goes up. They're also looking for permission to issue new shares and to sell those shares without offering them to existing shareholders first. This is something called disapplying preemption rights. This can be useful for raising money quickly, but it can also dilute the value of existing shares. Finally, there's a vote on how often shareholders should get to weigh in on executive pay. Every year, every 2 years, or every 3 years, shareholders get to pick their poison. Their board of directors currently consists of 9 directors. They also have 4 standing committees: the Audit Committee, the Remuneration Committee, the Corporate Governance and Nominating Committee, and the R&D Committee. Here's a look at what KPMG, their independent registered public accounting firm, charged them for the last couple of years. In 2024, they paid KPMG $1,208,000 for audit fees. That's for checking out the company's annual financial statements. They also paid $4,448,000 for audit-related fees, which is for things like reviews of quarterly reports and help with registration statements. So all in all, KPMG cost them $1,000 and $656,000 in 2024. Let's peek at their burn rate. In 2024, they granted options for about 90 million shares. That's about 5.9% of all their outstanding shares. The burn rate is the number of options they give out compared to the total number of shares they have. Is that a lot? On average, from 2022 to 2022 to 2024, it's about 6.3%. Who owns the most shares? Eco1 Capital LLC, which holds 10.48% of the company. Then there's Long Focus Capital Management LLC with 7.84% and New Enterprise Associates with 6.53%. The CEO, Adrian Rockcliffe, himself owns 1.52% of the company, which doesn't seem like that much, but that's not all. He owns about 23.5 million shares. Alright, let's dive into the juiciest part. How much the top dogs are getting paid. It gives a rundown of how they decide how much to pay their top executives called NEOs. Here are some key numbers. Adrian Rockcliffe had a base salary of $676,000 with a target bonus of $485,600. William Bertrand had a base of $418,118. Cynthia Picchina with 3063 times for the annual bonus. What did they actually get? Adrian took home $324,480, William $17,586, and Cynthia $131,100. So they got about 80% of their target bonus due to the company reaching 80% of their goals. Adrian Rockcliffe got $15,250 in 401 Kekial, matching, and $19,618 in insurance payments, and $7,907 in tax reimbursements, for a total of $42,775 outside of the normal salary. Not bad. The board really wants to take care of the higher ups, and it shows. It lists the amount of unexercised options. Adrian Rockcliffe can buy 35,756,836,836 at a set price. Finally, they have the clawback policy that lets them take back money If executives did something bad, only if the company is required to fix an accounting error on their financial statements and the person is found responsible. So what's the story here? Adaptimmune is making some big changes, their CEO is making decent money, and the company has been moving their executives around recently. The board seems to be on track. The company's direction is looking shaky, as there's a lot of business goals that could be missed if the plan goes awry. It seems like something interesting is cooking at this company. That's all for this episode of Corporate Decoder. Thanks for watching. If you like this video, please like and subscribe. Also, let us know in the comments what company we should explore next.